And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talk. Now, it has been quite a while that I've done a little live stream. Now, life happens. Became recently a father, and actually, it comes with a shitload of work additionally. So, in any case, currently, like I promised at the beginning of this year, my focus is mainly going to shift from crypto towards Bitcoin only. And with that, the first live stream Blockchain Talks episode of this month, well, is going to be about ordinals. We'll discuss what ordinals are. I'm going to show you guys the ramifications of ordinals, so what occurred since launch. And actually, perhaps I will be tooting my own horn a little bit by reason, well, when ordinals was launched last year, I did already do a little breakdown in a Twitter space and, well, made a few predictions. Predictions which, sadly enough, came true. But for those who are new to it and want to learn everything that is about ordinals, this is going to be the live stream you guys will be needing. So let me first start sharing my screen here. There we go. So, the little discussion I was talking about, this is from last year, as you guys can see, 1 year ago. It's still available on my YouTube channel. Yeah, don't mind the music here. Those who know me know I'm quite a metalhead. Anyway, this is the discussion I had last year, where I did a breakdown on the Ordinals protocol. This time, I'm going to do it once again. Back then, it was a simple audio file. This time, I'm going to show you all the resources, all the data, everything with proven track records. So let us begin. Well, docs.ordinals.com. This makes part of the actual Ordinal website. It is the website that Casey Rodamore wrote and presented his ideas about Ordinal. And let's just read through the introduction here. Handbook is a guide to ordinal theory. Theory concerns itself with Satoshis, giving them individual identities and allowing them to be tracked, transferred, and imbued with meaning. Satoshis, not Bitcoin, are the atomic native currency of the Bitcoin network. That's true. As everyone knows, we always talk about Bitcoin, and everyone knows that one Bitcoin is equal to 100 million Satoshis, as can be seen here. And that's basically what is being meant with the atomic native currency. It is the smallest increment you can have when talking Bitcoin. It's a little bit when talking about the US dollar or the euro. There, the smallest atomic native currency is going to be a cent. You've got euro cents and you've got, well, pennies, nickels, dollar cents. You've got $1.00. That 00 is actually $0.01 cents. That's the smallest measure you can have. And the same applies to Bitcoin and plenty of other coins and tokens. Anyway, ordinal theory does not require a sidechain or token aside from Bitcoin and can be used without any changes to the Bitcoin network. It works right now. Ordinal theory imbues Satoshis with numismatic value, allowing them to be collected and traded as curios. Now, what does this mean? Ordinal theory, I'm going to rephrase that sentence. Ordinal theory gives a certain numeration towards the sats, meaning that, well, for example, in the beginning, you had the first Bitcoins which were mined through the Genesis block. And those were like, well, the very first Bitcoin. And the very first Bitcoin that has been mined also had the very first Satoshis, meaning 100 million Satoshis which were mined. And ordinal theory says we are going to give these a number. So the very first Bitcoin has the very first 100 million Satoshis to be mined. And each and every Satoshi gets a numerical value. And through ordinal theory, they say, look, this means they can be collected and traded as curios. And you can best compare it towards those coin collectors who do so with the US dollar. You know, the kind of guys who, well, really, I wanted to say hoard, and here my English is failing me a little bit, who really collect old coins, like old US dollar coins from 200 years ago or from during a specific era in US history. By reason those dollar coins, they had special, how to say, I'm not going to say something special, but they were minted with a year and their date of mint. And that makes them, between brackets, more valuable, at least in the eyes of collectors, due to a proven track history. And that's a little bit what the Ordinal Theory Handbook is saying here. Anyway, individual Satoshis can be inscribed with arbitrary content, creating unique Bitcoin native digital artifacts that can be held in Bitcoin wallets and transferred using Bitcoin transactions. Inscriptions are as durable, immutable, secure, and decentralized as Bitcoin itself. Most important part from this line of text has to do with inscriptions. Each time you send a transaction on the Bitcoin network, well, there is a hash associated with the transaction you made. And with a bit of creative programming, you can make an additional annotation on said transaction. Compare it a little bit if you make a transaction with your bank, whereby you say, okay, I'm writing down $50 towards some company that I've bought stocks with, and in the annotations you say for stock, I don't know, Tesla or MicroStrategy, etc. This can be done on Bitcoin itself, in the sense that, well, in the history of Bitcoin, inscriptions have always been around. There has been, I'm not going to say it was a bug, neither am I going to say that it was consciously done, but the option existed. Now, problem here with ordinals, and that's what we are going to see later on, are those inscriptions. Because, and that's something I want to give to you guys straight away, the use case of Bitcoin is that of a peer-to-peer electronic cash system, meaning it needs to be used for payments. Plain as simple as that. Annotations, that's a little side thingy. It is possible, but it's not its main use case. Now, with this little thing, they say, okay, each inscription you make, each annotation you make with transaction is immutable and secure because it is saved on the blockchain itself, which in itself is okay. Problem here is with the arbitrary content. More on that later. Continue. Select here. Other more unusual use cases are possible: off-chain colored coins, public key infrastructure with key rotation, decentralized replacement for DNS or dynamic name service. For now, such use cases are speculative and exist only in the mind of fringe ordinal theorists. For more details on ordinal theory, see the overview. For more details on inscriptions, see inscriptions. You're ready to get your hands dirty, a good place to start is with inscriptions, and that's what we are going to do. Now, you see here in the introduction, you have overview, so it's plainly the introduction we have. And they say, look, this is what is about ordinals with rarity. And here they say, well, a little marketing gimmick, a little breakdown of how you can find the special ordinals, the special Satoshis. However, continue with digital artifacts, or they give you a little introduction as to what NFTs are. It's rather simple. If you read this, you can understand NFTs. Now, the most important part is going to be the inscriptions. Why the inscriptions? Well, everything here where it concerns ordinals falls down to inscriptions. Now, they give you a little history here with some additional context, etc., on how they did it, inscription, yada yada yada, sandboxing, reinscriptions. Now, if you are a techie like me, can read the entire description, because as I said in plenty of posts I made on Ordinals since last year, and during other live streams I did about Ordinals, I respect the tag, I respect the creativity on how it is being done, but I oppose the Ordinals and all those inscriptions and see them as spam, as an attack on Bitcoin. But naturally, that's my opinion. I'm here to educate you guys, so I'm going to try to remain as objective as possible and let you guys draw your own conclusions. Now, what is the important part here about inscriptions? Now, with inscriptions, you're ascribing additional data to a transaction. Now, as a little bit of very, very boiled down theory where it concerns Bitcoin, each time you make a transaction, doesn't matter how many sats or Bitcoin you are sending, a transaction is being made and a hash is being created. With an inscription, you're adding additional content to said hash or to said transaction. Now, what did the Ordinals do? Well, there wasn't really much space to do really anything, or so we thought. In the case of Ordinals, they found a little bug which needed to be fixed in reality, and it allowed for inscribing additional details to the transaction. 40 character long 40 character long data that can be added to the transaction. And that's where the trouble began. You see, that 40 character limit allows people to inscribe data, small programs, which can be read and make the transaction more heavy in block space than it needed to be. It's a little bit like sending a little virus, a self-generating virus towards another computer, if I may say so. For example, I'm writing a little program here, and it's really, 45 lines long, and I send it towards a friend of mine. The very second he opens that file, those 4 or 5 lines are a little algorithm which says to the computer, you need to do X, Y, Z. Before you know it, the computer starts running that algorithm because it's reading and trying to open the file, and that file is no longer 5 lines long. No, it starts generating images based on the lines of code that I've put in. And suddenly you have, well, something which is 1 or 2 megabyte in size. This is exactly what happens when you are using zip files and transferring them through, well, email, WeTransfer, etc., etc. You've got a little algorithm which contains very compacted data together with an algorithm which says you need to do that. Now, that's what Ordinals has done to the Bitcoin blockchain. The 40 characters they are abusing is creating a little algorithm which generates a specific outcome, which takes up block space by bypassing a variety of rules. I need to be clear on that one before some Bitcoin maximalist starts pointing out the inconsistencies. Though I just want to point out this is a very narrowed down version, not all too technical, so everyone can understand. Anyway, that's what Ordinals does. It's the focus on inscriptions, which allows for an algorithm to be read, which allows for a big amount of data to suddenly be generated, and by bypassing a variety of limiting rules, which fills up, well, the blocks in which the transactions are going to be saved. Now, very important to notice here is having to do with the ordinal theory itself, as we saw here. in the introduction. You see there's 100 million Satoshis per Bitcoin being mined. And, well, with ordinal theory, you're giving them a numeristic value. Now, in order for transaction to take place, you will need to send at least one Satoshi. And that's exactly what is occurring with ordinal theory. Instead of saying I'm going to send 100,000 Satoshis with a little transaction detail with the algorithm for image generation, that's not the case. This is being used to send one Satoshi with additional data and saying the data that has been inscribed on said transaction is more worth than Satoshi itself. And that's a little bit like saying, look, this USD coin from 1789 or something is worth more than the current dollars, whereas in reality, pure financially seen, they should be equal in value. Now, this might seem as a very weird concept to anyone, but let's just say that you have $1 from 2022. Date is inscribed, and then you are going to transfer it to your friend, but you say to that friend, yeah, but this $1 has been used to pay for a COVID vaccine. That makes it more worth in value due to the purchase and the annotation with the transaction that came with it. All in all, it remains $1. It doesn't suddenly become more valuable because there was an annotation and used somewhere. It makes no sense. But yeah, I'm trying to remain objective here. So if you want to learn more about ordinals and how they work very specifically and technically, I'm going to say go towards the website docs.ordinals.com. It's the entire breakdown that Casey Rudamore did on ordinals. To me, I find that they did very little dedicated time on the inscriptions upon which everything relies, and really focus on the claiming of sats and doing some bounty work, etc., which in itself is already kind of weird and scammy. But hey, that's just me. Moving on. So this gives us a little overview of the amount of inscriptions which have taken place, and naturally where you can browse all ordinals. Now, I know there's people watching here who are fans of ordinals and want to see their inscriptions, want to see how well the ecosystem is doing. Well, ordiscan.com gives you a very, very nice overview. You guys can see here about 61 million, or 61 million, I'm going to say, rounded up, inscriptions have taken place. They say 15.8 gigabyte of stored data has been added to the Bitcoin blockchain, pure ordinals wise. Now, I'm going to say this is an underestimation. I have a variety of reasons to say that. Currently not going to show it. That's an entire discussion which stands separately from this one. And this is the amount of Bitcoin which has been used for doing the inscriptions. It's naturally 61 million inscriptions means about 61 million sats that have been used. However, there's still the transaction fees which need to be taken into account and trading going on. So that's about the Bitcoin that has been spent on doing said inscriptions. What are inscriptions? Well, let's find out, shall we? Now, first thing you see here, you see texts. TXT, 115,823 bitnats. From time to time, you see a little image like this one, a PNG, JSON, Euro transfer, RATS transfer, IDAO 24A, PIN, depth. Now, what's all these weird things that you are seeing here? Well, this is data. Not only are ordinals the kind of NFTs you can collect, they also allow for tokens to be made quite easily on the Bitcoin blockchain. By reason, well, it's a little bit like the programming you are seeing here. Got 40 character long space that you can add to a transaction, meaning you can start creating tokens on the Bitcoin network. Tokens whose data will be saved as well on the Bitcoin blockchain. That's one of the reasons why I was a little bit skeptical about this. They say 15.8 gigabytes stored data. That's only based on the inscriptions being made, on the data being made per annotation, per transaction they've made. In reality, that number is much higher due to, well, inscriptions like the JSON that you saw here. Those are algorithms which allows for the creation of tokens and which on their own subscribe additional data, not ordinals related towards the Bitcoin blockchain. So it starts bloating up the network on the long term, together with naturally the PNGs you're seeing here. So the different kind of images. And actually you're seeing here from the BRC20 tokens, the transfers, the data being additionally minted, additionally being added to the blockchain network. And it can go on for quite a long time, as we had 61 million inscriptions being made, each time a mint of an additional thingy here. This is another NFT, this time based in HTML. So yeah, you can go wild with it. Where's sats? That's a little bit the bounties that are being collected. Got uncommon, and they say, oh yeah, that sat ever being used there. Price per set, we give you about 426 sat. Current supply 831,000. Inscriptions 15,240. So uncommon ones, rare, epic, legendary, mythic. End of events. So it's really bounty hunting. It really is like collecting old USD coins and giving additional value to something which is actually quite new, but due to a certain use in history is getting overinflated with price gouging and giving value where actually none should be. It's like I said, like that $1 that has been claimed to be used for whatever in recent history, and you do that transaction that has been done and being sent towards another guy, suddenly instead of being worth $1 is suddenly worth several hundreds or even several thousands, as you guys can see. Now with ordinals, and I touched upon this, I already talked about congestion, bloating blockchains, bloating up and saving more data onto the Bitcoin network than there should be. And one of the side effects is what you're seeing here. Ordinals are driving up Bitcoin fees, but that may be good for network. From the get-go, I'm not agreeing with this one. I mean, I do not know of people who are happy to pay for transaction fees if they want to withdraw money. It's like saying it's a good thing for you guys that if you withdraw money from your bank account, that you need to pay higher fees in order to withdraw. That's only good for the banks. It's not good for your day-to-day users. So that's a bullshit excuse. There's an article from December 19th last year. And really, it comes down to saying, look, Bitcoin fees are being driven upwards due to ordinals, pricing out regular transactions, meaning that, between brackets, miners are earning more Bitcoin through the transaction fees associated and pushed through ordinals. entire different discussion over there as well. One of which I dare say isn't really true. Those who follow me on Twitter know that I did the calculation, know that I'm an active miner, and I dare say that Ordinals are actually using up more block space for cheaper prices than that miners could have for actual full blocks without the Ordinals. That's all I'm going to say about it. If you guys disagree with me, I'm happy to have that discussion. Not going to say my DMs, but on Twitter and on social media where everyone can read, I'll give you guys the good breakdown. I talked about data, and this quite frankly shows the current mempool. Now, what is the mempool? The mempool is where all unspent transactions, or where all transactions on the Bitcoin blockchain are, waiting to be picked up by miners, waiting to be verified by nodes. And naturally, I talked about block space. As you guys can see, we're here at 2.34 megabytes, 1.05 gets a lower one. And you see here a visualization of a block. What's this? Those are a variety of transactions. And each square you are seeing represents one transaction. One transaction and their size. Meaning, this is one transaction with their size, as well as these tiny ones. Can have a little bit of data, and this is being saved on the mempool before they get into a block that you can verify of all which has been added. You can see quite a few big blocks here and then the much smaller ones. Now these, that's possible, might have been coin joins, might have been a variety of transactions grouped together. Generally, the bigger ones you are seeing like this, they are the biggest ones. Those are the ordinals you're seeing. And as you guys can see, example, this block here takes up the space of quite a lot of smaller transactions. And that's what I meant with congestion of the chain. That's what the article mentioned about driving up transaction fees. Because less smaller transactions paying their fair share of the transaction fees can be saved per block, by reason the blocks themselves have additional heavy data that take up block space. That's kind of problematic, by reason small transactions are being priced out, meaning they aren't being picked up by the network. And to me, that's something problematic, because what we're talking about here is pure speculation. Speculation about digital images which are being preferred over legitimate transactions. Imagine this where it concerns ordinals. Let's focus on traditional finance, traditional euros. You're at a bank and you need to pay for service. You need to pay for health services. Your grandma has cancer and you need to pay for her treatment. The bank says, sorry, we cannot process said payment at current time by reason our ledger is full. Cannot process it right now, but your grandmother will receive the treatment as soon as the transaction has gone through. Problem is, transaction remains in limbo by reason of people making big annotations with other transactions based on some images that they're drawing on the ledger. That means legitimate transactions, which can be life-saving, are being priced out in favor of digital art, of some pointless digitally generated images. That's something which sits very wrong with me. But People will say it is a free market. You can do whatever you want. We paid our fair share. True, but there's a few subtleties there which need to be taken into account and does not make it look very fair. Now, you guys can say, back to the main meme pool space here. You guys can say, yeah, but it's all right. I mean, in general, blocks of 2.2 megabytes, it's all right. Not exactly. You see, one of the many troubles here, has to do with what you're seeing here. Oh yeah, it's in Dutch. Can I switch it to English? Yeah, probably, whatever. What's being used here? Thrown away, unconfirmed. You can see with memory usage here that the amount of unconfirmed transactions is increasing. It means that quite a lot of transactions are being ignored. Even so, currently are all transactions which are underneath 4.27 satoshis per vbyte are being thrown away. That's a numerical value which is a bit odd. In reality, it's going to be under 5. The reason Satoshi is currently the atomic value, atomic unit of Bitcoin. So it's going to be 5 sats. Now, I want to show you guys here a little bit playing around here. Anyway, my other thing is we're currently seeing here blocks 2.17 of almost 2 megabytes. The maximum block space for Bitcoin network, the theoretical maximum of 4 megabytes. Sadly enough, and it's a shame it didn't show up. I'm going to show you guys what exactly happens with ordinals. Can I be shown? Yeah, I'm going to try to show you guys. Yeah, so 4 million weight units or 1 million virtual bytes with 4 weight units, yada yada yada. I want to have the biggest block to show you exactly what ordinals is capable of doing. Where is it? There it is. Set back towards the meme pool. There we go. So this is the biggest block ever mined on the Bitcoin network. As you guys can see, only 63 transactions have been saved in said block. This was expected. Coin joins, transactions, very small one. This is the real block. Very few small blocks, one big ordinals block. And you can see the problem straight away right here. Expected was that the transaction costs would be for the miners 0.02 BTC or Bitcoin. In reality, the ordinal taking so much space has this been the reward for miners, meaning they've earned less money than they should have. It was expected 4 MU, so in weight it's all right, but the amount of transactions which had a backlog is about 97%, almost 98% less transactions for this humongous block. Simple transaction, which included an image. You might say, which image? Well, I know I could visualize it here. Those are the confirmations, yeah. If you put it in, you can see that it was a Taproot wizard, one of the very first being minted. An image of about 3 megabytes in size. It effectively pushed out more than 2,500 legitimate transactions. 2,500 transactions which remained longer in the mempool. Transactions which could have been life-saving to some. And people say it's a free market, and because a fee was paid, it is legitimate. Expect with Ordinals that such filled blocks with such low transaction fees going towards the miners will occur future-wise, especially when the bull run takes off again and that a variety of VCs or venture companies suddenly have the millions and thousands of dollars again. Now, I'm not going to say that Ordinals are bad. They are bad on the Bitcoin network, on the Bitcoin ecosystem. To me, they have no place over there. Other chains exist which are far more better suited to do so. But the Bitcoin network still is about peer-to-peer electronic cash system. And let's head on over towards Reddit here. First 4 megabyte block in Bitcoin history mined by Luxor. Biggest block ever, so that's what we saw, so I didn't have to do the research. Small thingy. And this is what the inscription is. So that, all things in red here, is just for this. One lousy JPEG. Now, you can say from a marketing perspective, that is one great thing to see. People would pay millions to see it, but in reality, it's just a crime in my opinion. You can see here content length, what type it is, genesis height, Teleburn address, yada 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 yada. It's plain bullshit, and quite a lot of discussion is being had about it. And we can say that any genuine Bitcoiner, any true maximalist, will automatically reject such things. Now, with all the congestion and the stuff I've shown you, movements are being made. And what you're seeing here is the Ocean Mining Pool, their official Twitter account. People who follow me on social media, especially on Twitter, will know that I have my dedicated miners joining up with the Ocean Mining Pool. Why? Ocean Mining is actually the second iteration of Luke Des Jr.'s previous, one of the very first mining pools in Bitcoin, which you could still, back in the day, mine with GPUs, but that's a piece of history. And he relaunched it, rebranded it, in order to filter ordinals, in order to avoid future blocks like this to occur. I mean, disastrous effect speaks for themselves here. This could have been going to the miners. Their fair share of saving transactions, of verifying transactions, etc. But instead, they got spam and a much less money in order to operate. They're operating at a loss for having mined that block. That is all that I'm going to say here. And Ocean Mining says, look, we took a look at Ordinals, we took a look at their coding, and we realized a mistake which has been made with SegWit and Taproot back in the day, and we are now implementing filters on the blocks that we are going to mine. And Ocean Pool started out with that idea by getting back to basics, by being more fair to the miners. Because let's be fair, you've got Foundry, you've got Antpool. Those are the kind of, well, those are the biggest pools currently in Bitcoin with the highest chance of mining a block. However, ocean mining is increasing in strength. But what I want to say is these mining pools do not have the filters implemented like ocean mining does. Antpool and Foundry allow shit like this to occur, allows an unfair distribution to occur. They allow for, well, transactions to be censored and being priced out for actual trash data, life-saving transactions, which could save lives of people, which could help people somewhere in Africa pay for their electricity bills or for water or whatever, being priced out in Bitcoin to escape local dictators and tyrannies for a GPEG. It's one of the reasons why I joined ocean mining. Another reason that ocean mining does, apart from setting up the filters for the block templates they want, because blocks work with a variety of templates based on the arbitrary data which comes with the transaction. They filter out a certain amount of blocks like these, for example, even that one, and prefer the much smaller ones which pay their fair share. That's a block template. Now, a block template can also include the additional data. Well, I'm mixing stuff up here. I'm going to rephrase myself a bit. Block templates talk about transactions and the annotations that come with it, the hash data. And, well, quite frankly, ocean mining has filters introduced which allow for small transactions with no annotations to take place in general, and filters out blocks which surpass a certain data size. Now, this might sound simpler than it is, but in reality, it's much more complex. By reason, from what I've shown earlier with the block size, you have coin joins which give rise to bigger blocks like these, but it also implies there's certain annotation data that comes with it. Data which is linked towards legitimate transactions, but which are saved in one slightly bigger block. Problem is to see that factual data being justified and needs to be saved on the blockchain. Otherwise, you're still censoring a certain amount of transactions. That's a little gray line, but which can be programmed out with some creative programming. It's something in the builds, but ocean mining got it, for the most part, fixed. It will be avoiding future situations like this one if ocean mining mines the block. Because what you need to know about mining with what concerns mining on the Bitcoin network is that it is permissionless naturally, but that there's fierce competition. I've spoken about other mining pools such as Foundry, Antpool, and many others. The other pools who do not have such filters introduced, they are at risk of doing exactly that. It is in the best interest of things like Foundry and Antpool to follow suit with ocean mining and avoid such disastrous blocks to be mined, for the same reason that we are seeing here. Their revenue will collapse by almost 88% if the Bitcoin network keeps on being attacked by such JPEGs. It keeps on being spammed by such trash data that the amount of transaction fees that they could have been rewarded with are being drastically reduced, whereby they can no longer sustain their pool. That's a very dangerous thing to have. Get a little bit deeper here. I've been talking about filters and data. Now, what is it? But well, Luke Jr. here gives a little breakdown on what it is. The OP return discussion is not new and dates back to 2014 when Bitcoin Core 0.9.0 was released with the OP return policy included, which was intended to discourage more egregious forms of spam. At that time, 40 bytes was the default max data carrier size limit across all node implementations. Remember what I've been telling the entire stream here? The 40 character limit? That's what I'm pointing at here. Data carrier size, which allows for inscribing a certain amount of data. 40 bytes data carrier size means that you have, very loosely, the ability to put in a very small program upon which I said, look, you can start including smart contracts and algorithms in order to generate a certain amount of data. That what I was talking about. Anyway, this was and still is sufficiently large for tying data to a transaction, 32 bytes for a hash and 8 bytes for a unique identifier. Core subsequently increasing the default to 80 bytes was an entirely voluntary decision and in no way contradicts the design objective that OP returns creates a provably prunable output to minimize damage caused by data storage schemes, it as Ordinals, which have always been discouraged as abusive. Why? Bitcoin network, like I said, use case of Bitcoin is peer-to-peer electronic cash system. The Bitcoin network is geared towards said use case, meaning the Bitcoin network is not a free cloud data storage system. And that's exactly what he's telling here. He's telling you guys the Bitcoin network is not a data storage system. So all schemes, all attempts to make it so should be censored and must be discouraged by reason they are trying to make Bitcoin into something it isn't. And naturally as abusive, that's basically what he's saying. There are also other good technical reasons which I have chosen to retain the lower default in Bitcoin nodes and no justification for increasing it. It's not my intention nor that of my team at Ocean Mining to fill the coin joins. Like I said, these present an innovative tool for increasing Bitcoin's privacy, and when constructed properly, coin joins can easily stay within the OP return limit. Indeed, there is no reason for them to have any OP return data at all. Some ideas are now to alleviate the recent issue where some CoinJoin transactions were flagged down as spam from nodes version 25, and I'm willing, with the full resources of my team, to work collaboratively on a solution in good faith. It is, as I said, where I spoke about, yeah, you've got larger data carriers here, like this one, which might surpass the imposed limit of the filters, but are actual real transactions being grouped together, hence the name CoinJoin. Some of these, and especially the big ones you're seeing here, those no doubt are Ordinals. It's really the slightly bigger things here that you see that are coin joins. This might be one, needs to be verified, but yeah, you catch my drift. If you're seeing this, what needs to be filtered out is this, and all those bigger sizes, with the exceptions of these ones and the smaller ones. That's basically what he's saying. Bitcoin does and always has allowed nodes to set filters based on multiple sets of criteria, and nodes v25's defaults are, in my opinion, what is the best for Bitcoin at this time. Others may disagree, and that's okay. They are free to and should run their own nodes. It is good for Bitcoin to have more people running nodes, including miners, and there should be a natural diversity in node policies. As was stated before, Ocean is on a path to decentralization, and very soon we are going to be in a position where it's a little bit of marketing talk. What he's basically saying is that Ocean mining, if you're a miner, is entirely optional. But he is very clear on their intent. Censoring out all the trash data, censoring out everything which has to do in making the Bitcoin network in a data storage system. The goal of Ocean mining aligns with that of any Bitcoin maximalist with sane and rational thinking and understands that Bitcoin is about a peer-to-peer electronic cash system, not a data storage system. That it isn't suited for NFT speculation, stick that shit towards Solana or Ethereum or whatever. Bitcoin is Bitcoin, made to use for payments. And actually, plenty of discussion erupts. I'm a fan of Luke Dash Jr., and everything he says aligns perfectly with what Bitcoin is. Actually, you get some counter-wins like the OG Brad Mills, and he says, Luke created Bitcoin using proof of work, which was invented to solve the spam problem. So verification. Bitcoin always had a spam filter. The block site limit is a spam filter. Satoshi said there are other things we can do to prevent spam on Bitcoin, and to Luke Dash Jr. and Ocean Mining. What ways to abuse it? So we can do if necessary. So basically, everyone who is saying that Bitcoin is anti-censorship is partially right. Bitcoin is anti-censorship in the sense of processing payments. And there is, in all honesty, quite a lot of censorship going on the Bitcoin network in regards to its use. We have actual gatekeepers, miners, nodes, people like Luke Dash Jr. and groups like Ocean Mining who are actively protecting Bitcoin against ordinals. It is a free market after all. Those people are protecting the network against daily situations like these, whereby the network is being flooded and congested with speculation, with trash data, which cheats out miners from revenue, which might scare them away, make the entire network less profitable, less interesting to help sustain, to help crash hash rate if such events keep on occurring. It has the very potential to wreck the entire Bitcoin network. And that's one of the dangers of ordinals, because what you're seeing here, especially this side, is pure congestion. When that block has been mined, all transactions you're seeing here, and even from the previous block, which weren't accepted, have been stuck in the mempool for a longer period of time. Instead of a 10-minute confirmation of your transaction, you're looking at 20 minutes or even half an hour. That's quite a dangerous thing to have. And if you think, yeah, but after that half an hour, everything will be made good again, mempool will be empty, not really. The network shifts. The moment this one has been minted onto the blockchain, that little ordinal, quite a lot of transactions have seen being moved, taken much longer than they should be. And it's really a dominoes effect which heads straight into the future. Because that allowed for certain transactions to not be included, to never be included, due to its size. And at that point, it is no longer about cheating. Well, I wanted to say cheating out miners of their revenue, which is also true, as you guys could see here. But it no longer is about a free market. What we're seeing here is actual censorship of hundreds of transactions. Hundreds of transactions which are being censored due to leaving no space for them to be included on the blockchain. And people might say, yeah, but in the next block they can be included. By then, it might have been too late. This is a first. But as long as the filters aren't globally accepted, we might be seeing something like this occurring on a weekly or monthly basis, making the Bitcoin network congested, seeing quite a lot of disastrous effects. So with that, I want to say you can trade ordinals. You can be a tremendous fan. You can say, yeah, but it allows for new economies to emerge and finance, yada, yada, yada. All I'm saying is, see this, see that. Because at this point I've been saying, yeah, but this block looks great. That was expected. You can see quite a lot of transactions. These are ordinals as well. They are taking up more space. What could have been this. Small transactions with much more transaction fees to be reaped, making mining Bitcoin more interesting, which in turn helps secure the network more decently. Instead, we had something like this. Revenue down, many more transactions lost and being put on hold. That's a situation no one wants. So if you're a fan of ordinals, keep what you're seeing here in mind. And if you say it's a free market, realize you are cheating out fair people out of real transactions. And I want you guys to remember the example that I gave about the grandma with cancer. Because let's be honest, that is exactly doing it one transactions, but 2,500 times, 2,500 grandmas who might now be dying of cancer due to one little transaction taking up all block space. So for that, I dare say, implement the fucking filters. Now, with that, I'm going to end this live stream. If you guys have questions, see, there's some questions here. I'm going to stop sharing my screen. Stan S, why are the first press vinyls comics books more valuable than editions? The answer is quite simple. History. It's historic value. And the same applies towards those first sats that I mentioned earlier in the live stream about the USD coin with the minting age on it. People put some subjective value to it, but in reality, they aren't more valuable than the other current stuff. I mean, they might be unique, but does it mean that they are more valuable? Value on that occasion is something very subjective. And if we are talking about money, well, $1 is $1. One Satoshi is one Satoshi, one Bitcoin is one Bitcoin. That's very easy to understand. But if you start adding, well, historic value, things get a little bit weird. I mean, oh yeah, it's the first sat that has been mined. Okay, but does that make it more valuable within the current payment system? No, it doesn't. And if you move that set with the very first NFT that we've seen on screen there with the Taproot Wizard, I'm going to say, does that set make it more valuable? No, it doesn't. It's historical, yes, and people might like it, but that Satoshi isn't suddenly more valuable. It's a little weird brain fart people are having. And yeah, to some people, it might sound as something reasonable, but to me, not really. I mean, you can hardly compare vinyls, comics, and books to actual used money. I mean, a euro from 2020 still has the same value as it has today. It fluctuated throughout time, and if it's still accepted by everyone, well, then it's €1 or it's $1 value still remains the same to any average person. And that's a little bit the issue with Ordinals. They're saying, yeah, but no, the sats are still currently being used, but due to their history, suddenly become worth more. One sat cannot be as equal in value to one Bitcoin. That's plain nonsense. And if no questions remain, I'm going to end this live stream. I thank you guys for watching. If you have questions, please feel free to reach out. Post your questions in the comments down below or reach out on social media. I'll be glad to give you guys a little further breakdown or continue certain points, certain discussions that I've purposely omitted here in order to shorten the time and keep the live streams below 1 hour in time. With that, I'm going to say thank you guys for watching, and up until next time. Bye.